Hello, 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 everyone. Mike Arnold here, co-founder, Path Trading Partners, along with Bob Iacchino, who's actually here again today to talk about the Fed and what the Fed said. But if you want to hear what he says, you have to ring the bell, subscribe, and hit the like button, else I'm not bringing him on. So that's all there is to it. It's sort of like blackmail. Blackmail for Bob Iacchino. Let me see. I'm going to disappear me off this.
Disappearing you?
I'm disappearing me. Hold on. Oh, look
Yeah.
at this. We're
Am
both
I
up
in
here
it or
now.
not? I'm actually not looking at it yet because I'm working on something in the background here. But
You're
am I in or
working?
not?
Hold on.
What?
There we go. Look at that. We're in the corner now.
Got us both?
And you don't have big-headed Mike there, so we're good. No big head Mike. By the way, before we do get started, I guess I have to name it. The company shall not be named, called Tesla, had earnings come out, and I know that was a beat versus street, but most people expected the beat. Intel beat, but they're getting the Microsoft treatment after hours. We'll have to see if they get the Microsoft treatment secondary reaction, which was the effort to dump last night. You got the run up. That's the major coming in for after hours. I just have the what everything else is up here. So if you want to take a look at anything after, if we do have time, tomorrow morning, let's see. We have MasterCard going to watch that, especially with consumer charge-offs and everything else, with potentially slowdown. McDonald's always checking on that because that's sort of a gauge of budget food and how inflation's affecting things. Maybe I'll check Sherwin-Williams because I feel I'm in a repainting kind of mood. That was a joke. Let's see. I'm not, their earnings decide whether I will repaint the interior of the house. That's the big stuff I'm watching tomorrow. I'll check on Northrop Grumman just because of what's going on. Oh, I always take a look at Tractor Supply. Always like to see with them. They can be a good play in a while, every once in a while, but they have been overextended and now finally starting a decent pullback. So that's what we're looking for tomorrow. Let's see. Oh, here's our heat map for today with the little pullback. So actually, Microsoft's still up. Google up nicely. Intel was up. After hours, they were a bit down. Visa up. MasterCard, we'll have to see with MasterCard's earnings tomorrow. So we'll have to check on that. Tomorrow we have advanced GDP quarter over quarter. And then the advanced GDP price index. I'm just looking durable goods, core durable goods tomorrow, and just regular durable goods. So definitely going to be watching those in the morning. Again, 8:30 Eastern. Unemployment claims. So tomorrow, 8:30 Eastern is going to be very busy. And then we had the new home sales, and I'm again pending home sales tomorrow. New home sales were a beat this morning. So it's still another busy morning. By the way, we can get Bob in here, but the Fed Watch tool, let me update it again. I'm curious because I brought this up specifically for you, Bob. Well,
Yeah.
if it does, it was up at 95% this afternoon, and then it dropped back down to 83% for it looking like a. Do I still have it on March? Let me make sure I still have it on March. Yeah, March. March. Rate hike 83.8%. Yesterday it was at 87. Earlier it was 95. Any comments on that?
Yeah, I think that the fact that they didn't talk any more aggressively on rate hikes kind of took that probability down, but I expect it to go back up. The rate hike's coming in March. Just a matter of whether it's going to be 25 or 50. And what you see here on the Fed Watch tool is the portion that was at 25 moved into the 50 camp. So the 50 camp is what raised up. Like if you look at that bar to the right,
Yeah.
that's, our rate's going to be at the next level. That actually bumped up a little bit and took it away from the 25. There's if I'm seeing this right, I haven't looked at it, but there's a 0% chance.
There's a 0% chance. That's what I didn't get to yet because I wanted to see what you had to say.
Yeah.
I was actually trying to see how close attention you were paying.
Well, I'm paying. There's a
It's
0% chance that rates stay the same.
yes, and that's literally
Yeah,
priced in now. Let's just glance at a couple other ones before May, because he said there could be like literally a rate hike at every meeting. Did he not?
he did. Yeah. I
A
mean, I don't know if
potential,
those are,
a
yeah,
potential
potential
rate
rate
hike.
hike in every meeting. And he kind of implied that they're data dependent. He's done that almost every time he's spoken, saying we change if the data changes. By that, I think he means if the equities go down another 20% from here, that would be the data he'd be looking at. But he needs to see some, and I said this on Monday, they need to see some breathing room in inflation. You can't go from, if you look at where the NASDAQ finished today, it's right around the levels where we're at last May, right? Somewhere in that range.
Well,
Might
let's
be a
call it
little lower,
up.
a little higher. Yeah, it's going to be somewhere in the range of where we were last May, maybe even June.
It's about where we were in June. I mean, you have it's just above the. It's really June. We're looking at where we are in June since June.
Okay, so inflation in May was 3.4%. In June, it had jumped above 4%. That's year over year inflation. So they had their opportunity when things were a lot stronger to just kind of keep equities where they are now rather than have them ramp up and collapse back down with this sort of delayed response. It's my stance that the Fed is behind the curve on inflation. But they have a dual mandate now. They have full employment and price stability. Clearly, we don't have price stability, but now we have what at least could be explained away as full employment. You can be arguments as to whether there is or not, but we're sub 4% on the U3 number again. So they can now look at it, look into a camera and talk into the microphone. Well, we reached full employment. Now we got to work on inflation. So I don't expect them to back down from this at all.
Okay, let's just see what. Let's see. William, holy smokes, market cracked. Kalani, thank you very much. Kalani, a regular here. Thank you very much for the super chat. Excellent, excellent, excellent. Again, all super chats very much appreciated to help keep the channel, the live streams on a daily basis going. Maybe
Help
Bob
keep
will get
me
a
in
raise.
polar ice.
What polar ice?
Got to help keep me in polar ice.
Oh, are they paying us now for a sponsorship?
Oh, I'm gonna
Oh,
call him as soon as
oh
we hit
man.
polar ice sponsor.
Claudia, hello, gentlemen. I've never seen a gap down in a 5 minute indices before.
How long you been trading?
It happens.
It happens.
A lot of people say there's no such thing as an intraday gap.
Yeah, there is.
Yeah, there is. Hey, Dan Jet. Who? Let's see. Let's see. Are you guys matching pink? No, I have.
Can't
I
tell
have.
Mike's wearing pink.
I have a striped shirt, and Bob
I'm
has
wearing
pink
pink.
on. We don't coordinate our wardrobes.
On Tuesdays we wear pink. What's that movie? Actually, that's going to make me sound really bad. But I think the movie is Totally Blonde, Legally. I don't know.
Legally
What?
blonde?
Legally Blonde? No, it's Mean Girls. I don't know.
I don't know. Wavy says hello. It's salmon, not pink. So we already have a Bob Defender here.
It's salmon.
It's salmon. Let's see. I'm going. Let's just. Yeah.
Maybe I agree.
Powell started talking, and all hell broke loose. Well, again, the what was in print wasn't that big a shock. Everybody was pinned on what he was actually going to say. My most interesting thing was when he said some people are just prone to suffer more. In the response, does inflation hurt different groups more disproportionately? Which I think it does. I mean, inflation hurts lower income a lot worse.
It does. A lot worse.
And I don't understand his comment then. Some people are just prone to suffer more. Well, yeah, but it actually hurts people with lower incomes worse.
I think it was a very poorly worded response that aligns with what you just said. Because he's saying that some people tend to suffer more. Well, he means that lower income tends to suffer more in all situations, which is really the truth. When they're suffering, lower income suffers more. It was just really poorly worded.
Yeah, I almost fell out of my chair on that one. I was like, "What, dude? That's where you need the time delay and just edit. I need to restate that.
Yeah, it's a very, very simple situation. I mean, if prices double on milk, I don't even know what milk costs anymore. Prices double on steak, you buy chicken. If prices double on both steak and chicken, you pay less in movie tickets. I mean, that's how it bleeds through to the economy is people buy what they need. I thought it was interesting during the credit crisis, 2008, 2009, people were more likely to let their house go into default than they were their car payment. I don't know if that was sort of the psychology of the American. You can live in your car, I guess. I don't know. But anyway, I'm digressing. Poor people buy less discretionary things when necessities go up in price. One of those is gasoline, by the way, which the Fed has no control over, given the situation.
And we've already seen, as I did in the sector recap over the weekend, discretionary sector has been getting hammered just because of that. Exactly what you said.
Yeah. I mean, if they don't have discretionary income because the necessities have gone up in price, which is what's happening, this obviously discretionary stocks fall. So you don't have to worry about luxury stocks. We're not talking about, stocks like Macy's or things like that, although they will suffer as well. You're talking about discretionary spending. It moves into things like Dollar General, which I know Mike always checks. Dollar General and what's the other one you always look at, Mike?
Dollar Tree.
Dollar Tree and Dollar General. Stores like Teladoc actually do okay. They don't necessarily suffer as much. Mike mentioned that because it's a rural community and they tend to sell staples that people need. So those are kind of the areas you want to look in. But
Yeah.
consumer discretionary has got to be out of the question.
Let's see. Shashi's back on. Thank you for the super chat. What a day. That stock puts 980 to 910 in less than 30 minutes. Made a killing.
Nice.
Let's see what else we have. Oh, thank you, Raj. Again, glad you are here. We have the regular clue. And Wavy with some feedback from Toronto. Inflation is insane in Toronto. Costs an arm and a leg to live in this city now. And that's beyond housing. Housing's insane in Canada, period. But then Fed has lost control. And wait, Canada didn't change the rates today, did they?
No, they left rates unchanged, and that was actually surprising to the market. The market was expecting 25 basis points, and it's a really interesting thing. Again, you could sense a little bit of politics in it because the Bank of Canada basically said the slack is out of the labor market. That's a paraphrase, but it's almost an exact quote. They said the slack in the economy is gone. We've taken up the slack. And they also said they raised their inflation target to 4.6%. But yet they left rates alone.
Yeah, you raise your inflation target, you say the slack's out of the market, and then you don't change rates.
Yep.
I don't get it.
And they have bigger labor shortages, relatively speaking, than the U.S. because the lockdowns in Canada have been more harsh than they have because obviously U.S., the different states have done different things. But the labor shortage, if it's not already there, is likely to be tighter there. I think it was a mistake, but again, that's really not our job. So,
although the one thing that one based off our Fed though, the one tweet that got me this afternoon, which I had to retweet, was hoping the Fed would legalize weed since they seem to be smoking it. That was the one tweet that I had to retweet this afternoon. That won the internet for me.
I haven't because I didn't get to watch the whole Q&A because I was out doing some content. I'm curious if they mentioned their purchase of MBSs. I know they didn't really go into detail, but I was hoping somebody would ask the question. I was tweeting at Steve Leisman and Michael McKee from Bloomberg all day, asking them, somebody please ask why, with as strong as the U.S. housing market is, again today, new home sales beat expectations. They're expected at about 756,000, came out at 811,000. Why are you still buying mortgage-backed securities with the housing market so strong?
I wanted to know that same thing. I mean, the housing is going through the roof again.
Yeah.
And you're still buying MBSs. Why?
You're exacerbating a current bubble.
And why can't they just cut that early? I mean, I don't get it.
I have no idea.
I didn't get the fact that well, I don't get a lot of what the Fed does anymore, but guess that's why I'm not a Fed governor.
You are not a Fed governor. That is correct. They
Although,
would can't afford you. So
no, well, but it'd be nice to have that information to trade my portfolio off of. Since it's obviously not illegal, you get to be a Fed governor for a while until you get busted. Then you just resign or leave for health reasons.
there you go.
Then now I'll never be a Fed governor with that statement.
No, that's going to be on tape. Well, it's already on tape.
Uh, let's see. Recession is coming sooner than later. Everyone is moving to Florida. I might do the same. Well, Bob moved to Florida.
I did. Coming up on 16 months ago now.
Best decision ever. When I was trying to walk the dogs and we had wind chills of 30 below this morning, and the dogs made it outside for under a minute, and it wasn't fun.
I made the mistake of asking my sister if I left any coats at her house because it was 50 here this morning and I was cold before I checked the Chicago weather.
That's let's see. What did Treasuries do?
Treasuries yields jumped, especially on the short end of the curve. Actually, I was going to look at that and I got distracted.
Well,
Here's
the 10 years.
Mm-hmm.
The 10-year, the bonds tanked. Let's take a look at the yields though. The yields, because I know the 2 years jumped the most in like a year and a half. Yeah, look at the 2 years.
Yeah, 2 years crazy.
That's a rocket ship.
I'm going to actually update my spreadsheet and then I'll send it to you, Mike, and I'll see when the last time the 2 year was at this level. While we're talking here, I'll update it. Yeah, that's a ridiculous move. I mean, that's 10 basis points from where it settled yesterday. That's crazy. 11 basis points. I'm sorry.
Yeah, that's a monster move right there.
Yeah.
Again, we have the harmonic projections on, so our next targets are a buck 18 and a half, and then one close to 125. The 5 years, another. They've returned to the area of the highs from just a few days from back from the 19th. The 10 years closing in on that level again, and then I'm watching 1.94 essentially. Even
it's interesting. It's interesting because the 10 year, the 20 year, the 30 year, they didn't move that much.
No, there's the 30 year. That's a pretty big move still though for the 30 year.
Well, I mean, usually you see bigger moves on the longer end of the curve than you do the shorter end of the curve. I mean, the 10s, 30s flattened by 3 basis points. The 5s, 30s flattened by 6 basis points. So, again, if you're looking at if you're trying to understand, people watching, if you're trying to understand what the yield curve means, the flatter it is, the more likely we're going to a slowdown. So that's always what you're looking for is it flattening or is it steepening? And we did have a period of steepening going on, but that's long gone. We've flattened back down to, let's just look at 5s, 30s. We flattened back down to the lowest levels. Still looking for it. We haven't had, okay, so my spreadsheet where I track daily yields goes back to June of 2021. This is the lowest yield. So I would have to go into an old spreadsheet where I kept last year's stuff. So this is the lowest yield we've seen at least since June of last year. Or I'm sorry, the flattest yield curve we've seen at least since June of last year.
Wow. Let's see what else. So what do you expect now for continuation reaction in the markets?
Are you talking about treasuries? Or are you talking about?
Well, let's go with treasuries first. We'll start with treasuries since we started that.
Yeah, I suspect that you're going to continue to see yields move in this direction because the Fed, while they weren't dovish at all, they didn't get extra hawkish. So, for example, what you saw in the 10-year is the 10-year settled now basically at the highs that we were at last week. The highest settlement last week was January 18th for the 10-year. That was a 187 settlement. We settled at 185 today. So all of the 10-year yield increases that the market put in the week of the 17th, it took out before this Fed meeting. We went into the Fed meeting with a 178 10-year. The 18th, we had 187. Today, we settled at 185. So any of that backpedaling that the market did is now out of the market. We're going back to higher yields. What we see with this yield curve flattening is one of two things. Either the economy is going to slow down, or the Fed's actions are going to work. Either way, people are looking at an aggressive Fed. That's what the yield curve is telling me. So I would expect to see a breakout above those recent highs on the chart you have on the screen now. What is that, the 10-year?
That's the 10-year yield, yep.
Yeah, I would expect that. I can't see what that green target is, but I would expect that's going to be reached.
1 point, it's right now based off the harmonic, it's 1.94 essentially.
Okay, so coming up on 2% on the 10-year. I'd mentioned before, I think it was in this live stream because I would never say this on TV. I don't think all of the Fed actions are priced in until we get a 225 10-year. So that's still what I expect.
Well, wow. That'll get interesting.
Yeah.
How about, all right, we got a question on the euro US dollar. Before that, here's the dollar index, which is back in this huge consolidation range. So the dollar was strengthening off the today's Fed stuff. Any thoughts on that as I call it the euro US dollar?
Yeah, so you're going to see continued weakness. There may be ask Mike about the technical picture, but you're going to see continued weakness in the majors. You saw it in the Canadian dollar today, and it's likely to continue simply because of the way the other central banks have behaved. So there was a conversation by Christine Lagarde. She was on a video chat. Christine Lagarde, again, that head of the ECB, European Central Bank. She was on a video chat talking about breakout sessions for the World Economic Forum. And they asked her about the ECB's stance. And she said, we don't have the same issues that the U.S. does, so we can stand to be less aggressive. That's the move you saw down in the euro 3 or 4 days ago, was off that speech. So I would expect that would continue now that the market is perceiving the U.S. as being more aggressive. So I would expect a similar result, understanding that the technicals could be saying wait or could be saying something different. Purely fundamental, I'd expect a similar result to the treasuries, that this move that it had today will continue, and break those lows that we saw recently. Looks like that's about November? I would expect those lows to be broken.
The lows at the end of November were essentially 111.86.
Yeah, I mean, Christine Lagarde basically said we don't have the supply chain issues or the inflation issues that the U.S. has. Bank of Canada basically increased theirs, but still didn't do anything. If you follow the path of what the central banks are doing, they're waiting, right? They're waiting. Even our Fed waited, according to my judgment, waited too long. So when you're looking at the ECB saying we don't have the problems the U.S. does, clearly they're going to wait, right?
Yep.
She basically said they're going to. So I'd expect the euro to continue lower against the dollar.
Yeah, and the next major harmonics are, in case you were wondering, and Christoph, you have dropped below 110. The next major harmonics I have are 110.5 and then all the way down to 109.16. So we could easily see that over the next few weeks.
Yeah.
I mean, we're again not in the next few days unless we had some kind of, it doesn't move that quickly unless we had a currency crisis, which isn't on the radar right now, but definitely something. Yeah, and you can see Christoph shake and bake on the dollar index. You can really even see it on the euro here. So we have major, and this is the exact thing I watch for. When we have essentially a horizontal channel, you see how well defined this is now. I'm expecting it to come down to the other end, which it did essentially today, but I'm now watching the lower because it sucked people in. All right, we're going, and then it just slams back down. So anybody who got long in here is now wrong. And if it goes down the other side, a lot of people have stops down here. It just amplifies the move lower.
Right.
That's why I love those shake and bake patterns. It sort of sucks when you get in, but it's because I've been sucked in on shake and bake patterns just because you don't know they're shake and bakes until it reverses. But you got to play the other way then. Uh, let's see. Well, this is two parts. If Fed Powell says they're going to increase rates from March, market will take a correction by then. Why not cut rates now? Why give it 2 months time? Is it to control stock market coming move higher?
It's to control equities, in my opinion. Yeah. They want to tap the brakes, not slam on the brakes. At least they want that perception. And obviously, I mean, I'm with you um, because I think they should have raised rates in June of last year and started to taper purchases. But yeah, it's really because they're hypersensitive to asset prices. Um, the thing about it is, people worry. You don't have to worry about inflation with equities. Inflation includes asset inflation for the most part. As a matter of fact, if you look at the correlation, um, inflation doesn't rise every time stocks rise, but stocks tend to rise when inflation rises. So inflation is actually a pretty good indicator that stock market will continue higher. So I think that they're just trying to kind of engineer a soft landing, which I would argue they already failed at, especially the price action we saw today.
Yeah, there was. I mean, just in the price action now, since you've touched on it, here's the S&P. Here's the daily chart. I mean, running up straight to the rotation zone, and I had a 44.46 significant level. What was the high? 40. My significant level actually on the chart is 44.46.25, and it just so happens uh, the high. What was the high today? 44.46.25. There, I nailed the high. I can retire. High in the bag. No, but that was just sheer dumb luck. But that was the area I was watching with the rise with the rotation zone, and then we just had that pretty blistering sell off. So, in order for me to get into somewhat bullish mode again, it has to we have to get back up to those key levels. So, again, we stayed pretty much above my bullish mode in the morning until the Fed announcement, and then it just dropped like a rock. What's interesting, you did have this little mini double top here. I didn't have that one mapped out on these charts, but I mean, it was tough because you have this flat area, but that was really, just overnight price action. And even from the aggressive side, you had it down to 43.15.75 and just spiking below it and holding back above. But that was the only thing that all right, we've now just triggered a double top pattern on the thing. So that's where even when it paused and you had these little bounces, I was watching for continued follow through to the downside. So that's about it on the S&P. NASDAQ, again, almost up to the rotation zone. I'm just looking. Again, the key lines in the sand. Keep watching. I mean, for a close tomorrow is in the NASDAQ is about 14,057. In the S&P, it's about 4,300. It was pretty much 4,325. So that's my key line in the sand. We start closing below there tomorrow. Then I'm watching for a potential retest of these lows. And the Dow, just giving you the key lines in the sand to watch for tomorrow, 33, about 657. Again, also the Dow running up to the harmonic to a significant level and to the rotation zone and then rolling over with the Fed comments. So are you more in the we're going to see more upside follow through, or it's just going to go into sort of a consolidation pattern, or break to retest the lows, Bob?
I'm more in the camp of we're going to see some consolidation and maybe even some higher moves. I really think equities are going to move up toward that trend line you have right there. Um, is this an equity chart?
Yeah,
Yeah, it
that's the
is.
Dow.
Yeah, I think we're going to see just kind of a slow grind up to there again. If you compare it to the way that the bear market in 99, 2000 went, there were multiple moves up higher. And I think there'll be a lot of conversation over the next couple of days that, well, we already know the Fed's going to do 25 here, 25 there, but then we're going to start to get a bunch of inflation data. And if we can see, it starts on tomorrow, as a matter of fact. Tomorrow we get quarter over quarter PCE data, which is not the big ones. The big one is the next day on Friday when we get the month over month and year over year PCE price data. But we're going to see some price data that's ugly. We're going to see crude oil go higher. We're going to see commodities go higher. Inflation is entrenched. It's not transitory right now. And that's going to give people the impression, okay, the Fed warned us that they're probably going to go slowly, 25 basis points, maybe for the next 4 meetings. But it's going to spook people into thinking that they're going to have to get more aggressive. Certainly, Jerome Powell, in my opinion, and I need to relook at it, but in my opinion, did not say anything that said, we're going to take it easy. We're going to go slow. He basically said we need to fight inflation, right? So that's kind of the way I'm looking at it. I think we'll see at least 4 rate hikes. Wavy is saying that Fed fund futures now pricing in 6. Hey, Wavy, just something that you should know now is from the perspective of the banks, um, Fed fund futures and LIBOR futures are being used less and less, and SOFR is being used more and more. So if you're somebody who's familiarized yourself with Fed fund futures, start looking at the SOFR futures and start getting a handle on how those work, because I think you'll like those a lot. The volume's picking up in those quite a bit.
All right, let me just how will Bitcoin behave with Fed tightening? Bitcoin was not there in 2008. I get Bitcoin also though is about it's in the mid 60% correlations now with the Nasdaq. So it's starting to get more and more correlated with the Nasdaq. Again, it's I think it's just a risk well, I can't really call it an asset, a risk tradable instrument, and you see how it reacted too. Again, my levels up here that I put out, I think over the weekend, were I was watching a first key level was this 38.5 area, which we ran up to into the rotations of the day and rotated down. I mean, Bitcoin, I think is going to decouple from everything because you're gonna have some stable coins blow this year with everything going on. So, but until then, I think it's going to somewhat behave, especially with downside to any sell-offs in Nasdaq. That's what I am watching for, and then I'm watching for it to trade sub 31 again, and then hit 20 longer term. Let's see. Raj asks, can you shed light on what type of commodities? Ag, precious metals.
All right, so 2 things about precious metals. Number one, we just entered one of the steepest seasonal periods of bullishness, specifically for silver. But there's a little bit more of steepness of a steep up move in gold. It's not the biggest seasonal tailwind, but it's one of the steepest seasonal tailwind. And I think the move prior to the last few days kind of shows that. And then you have to look at it from a perspective of, are we going to get any sort of flight to safety move? Well, if we're just playing off of Fed tightening, then gold should suffer. It shouldn't do well. But we have a Russia-Ukraine crisis, right? Which bleeds into not only gold, but also into wheat, into ags. Russia and the Ukraine are both big ag producers and exporters, specifically Russia. Take that further with natural gas and with crude. Natural gas, Germany just asked for a special exemption on sanctions for energy with Russia. U.S. administration threatened that Russia wouldn't be able to transact in U.S. dollars if they made any incursion into the Ukraine. And then Germany immediately asked for an exemption to the energy markets because they get their natural gas from Russia. Vladimir Putin is a vindictive leader, a jealous leader, an angry leader. He could stop oil production or cut oil production, even though it would devastate his own economy. And that would spike crude oil as well. And crude oil is already in a deficit. So those are the ones I'd be looking at. I'd be looking at, to a certain degree, copper is going to suffer a little bit because China's economy is slowing as well. But commodity inflation in general on any pickup in economic data is going to hit that inflation narrative pretty hard. I think it's mostly going to be ags, crude oil, and potentially silver and gold.
And just to go get some technicals in here, we're back into the gold rotation zone. And by the way, a separate signal is if tomorrow there's a close above today's high, there's dual signals. You get a rotation zone signal and a percent B buy signal on silver. You actually have one also. The gold just got whacked today, down 1.83%. If anything, I'd be leaning towards silver. Uh, there was some. What was it? Let me just check.
Silver seasonality is much stronger as Mike's looking for what he
Platinum.
needs.
I'm
So
still watching to see if it can get above, back above the 200. By the way, just keep an eye. You'd have to get a close back above the 200. It has not been able to get a close above there, but watch for a potential double top and then a bigger pullback in platinum. Palladium. Where's I have to look that up. There's been some other good plays. I'll have to come back to that with something else. I'll get in there. Here's crude, by the way. Crude with the nice rotation back up out of the daily rotation zone, coming up to a new recent highs today. By the way, two plays I like just from a stock perspective with commodities. I love to play DBC. DBC actually hit the next harmonic today on a gap and then came back, but you can see here rotation zone, really nice pullback in the rotation zone and a rotation back up. So on nice pullbacks, you have very key support 2185, and coming into the spring and summer, DBA, which is the Invesco DB Agriculture Fund, which especially can be fun to play in spring and summer. And if you're bullish on ag commodities, that is a really good one to play from a stock perspective. If you don't want to get in individual futures, you can always play moves in DBA.
I'll read something from Mike. You know who Jeremy Grantham is, right?
Mm-hmm.
Legendary hedge fund manager, 83 years old. It's a quote from him from yesterday. There's only a certain amount of cheap oil, cheap nickel, cheap copper, and we are beginning to hit some of those boundaries. He's basically saying we're going to hit longer term supply constraints with those as well, which again is part of the reason that I'm worried about inflation being more structural rather than transitory.
And Raj again corrected my because I can't spell anything for palladium, Pall. Thank you. I got that up on the screen, and this lit up on my radar screen, especially with what's going on with Russia right now. I'm Your key support is 2194. I'm actually watching for nice little pullbacks in here with rotations back up, especially after it hit the 200. But this could be if this conflict does not ease over with Ukraine and Russia anytime soon. This and Palladium could make another run. I mean, it's still way off its highs, even with this monster move. It needs to backfill a bit from my perspective, but you have a long term. You can see right here, this major support base was resistance here. Now's very key support. So anything back here with the rising rotation zone could be a very interesting play for Palladium.
Hey, Mike, I'm going to request if there's any more direct questions for me. I've got a hard stop in about 5 minutes. And then I see a bunch of questions about stocks, but Mike's got to look at the charts. So,
UCO, a good play for oil. UCO.
I mean, I would honestly, I would investigate micro crude oil futures before you go into
Yeah.
this. The correlation of these things
You
are
mean
just not very
USO?
good. I think he means USO. The
I,
USO
I
has some problems versus futures. If you compare a USO chart to a futures chart, they just don't move one to one, even adjusting for the different price levels that they're at. So I honestly, depending on which broker you have, Jake, you can be enabled for futures. If you want to take a futures position, there are micro crude oil futures. Mike actually has a position size calculator that includes it. It's they're tiny. It's like no, I know you're asking about the stock. I assume you're asking about USO. I don't know what UCO is. USO is an ETF, an oil ETF. But I would say if you're going to take a position in crude oil, take a look at the micro futures. It's just a better way to go. If your opinion or if you're charting crude oil, you don't really want to be in USO. But if you're charting USO, yeah, just use Mike's techniques. And I mean, you're in USO, you trade USO. Makes sense to me. But if you're looking for something to act specifically the way crude oil acts, I say this all the time. I don't like things that are a derivative of something else generally. Even if something has a 95% correlation, something I'm very fond of saying is, it's 100% correlated to crude oil futures? Crude oil futures. So if you have an opinion in crude oil futures, now that they have micros, 2 years ago, I wouldn't have told anyone to do this. But the micro crude are so small that you can take those position sizes down very small and have a really easy time of controlling your risk.
Yeah, the CME, what they've done now with micros with so many contracts is a great way, because before a lot of futures were just out of reach for just the average account size. But now you can trade a lot of these different markets in the micros without taking absurd amount of risk.
Right. The micros are great. They're long overdue.
Yes, it's for the average investor who's got a little bit of savvy to them. The futures markets are really where you can position yourself well for some of these moves.
Right.
Bob, before you go, in the short term, do you see the macro Fed situation getting any harsher for equities prior to the first rate increase in March?
I do. I think some of the pricing data we're going to get prior to the first increase in March is going to be ugly. And it's not going to move the Fed off of 25 basis points in March, in my opinion, but it could. I mean, imagine we'll get one CPI before that March data. We'll get, I think, 2 PCEs, although one will be a revision. And what if we're at 9.1% inflation? I mean, it's certainly possible that they could change from 25 basis points to 50. And I think it's one of the things they were expressing. I mean, if you get double-digit inflation, I don't think we're going to, by the way. I don't. But if you got double-digit inflation, oh my Lord, that's Jimmy Carter territory. It's crazy. So I think it could get harsher, yes.
Another quick question. Then I see you, Sterling. We already covered the 10 years, but this is going to tie into it. How do you hedge your 10-year shorts in case black swan events such as Russia-Ukraine issues?
You can do the yield contract. You can do the yield futures contract. There's also micro treasuries now. So that's one of the places you do it. But I mean, from my perspective, if you're going to be short the 10-year futures contract, you think for some reason that might turn around, buy some tech stocks, buy NASDAQ. NASDAQ is likely to rally much, much, much stronger if I'm wrong about 10-year yields. All right. Honestly, though, I wouldn't hedge it. I would just control your risk.
UCO is a ProShares Bloomberg. I don't even see that. Oh, maybe.
Yeah.
I was still clicked on. Again, UCO and USO, they're just at different prices. But if you look at the charts, there's UCO. That's why I didn't come up before. The Bloomberg crude oil, and there's USO. I mean,
one of the problems these ETFs have is the roll.
Yep.
When futures change contracts, they have to adjust. And I don't know what UCO's internal metric is. I know USO has had to constantly change their metric to try and get their ETF to match the new crude oil prices when the futures roll. So it's been a problem. Also, USO is only 50% crude oil futures contracts, and then it's 50% a mix of other crude oil related assets. But I've never looked at UCO, so I'll need to look at it. That's good to know. I'll look at it.
And it also gets interesting when backwardation and contango and everything else, because they don't all hold they hold a mixture of months, and it can get interesting where front month crude versus USO or UCO, and we'll take a closer look at UCO, but you can get disconnects in some pricing with that. So,
all right, guys, I got to jump. I will be on again whenever you guys ask me to. It's fine.
Don't say that. You'll be back on tomorrow, Bob.
Well, I'm making time to do this, so I probably won't be on tomorrow. I won't be on Friday. Actually, I could be on tomorrow if you guys needed me to be, but I'll probably be on Monday or Tuesday for sure.
All right, see, there you go, everybody. Now you can ignore me for 2 days and come back Monday or Tuesday.
Stop it.
All
All
right,
right.
with
Again,
that,
if you want to pre-ask questions, send Mike questions or hit either one of us up on
or
Twitter. We'll come on and answer them.
put it in Discord for all the people who are. It's sort of
Discord.
a bonus for being in Discord.
All right. I'm going to jump, guys. Thanks, Mike.
Perfect. Thanks, Bob.
See ya.
All right, you're just stuck with me. Let me get Small Mike back on. There's Small Mike. All right, let's see. CPI. Well, we'll see if we'll get him on. Let's shoot for like 1 week regular to get Bob on. Unless there's some earth-shattering movement or something really big coming out. Like next time the Fed comes in March, we might have him on 2 times in that week. But if you want to keep that going, everybody do hit the like button. We'll have to get some questions going in also in the Discord server. What else we want to recap? Again, let me just take a look at these. I got to just make sure I'm set up for tomorrow. Bullish line in the sand, 44.25, essentially 44.26. You had this double, which in the S&P. I needed to get above these candle tops, and you see how well those played out. So before that, I need a strong reversal pattern. But then if we get a sustained move above 44.26, I'm definitely in bullish mode for tomorrow. Below there, I'm in choppy to bearish mode. Again, unless I get some kind of strong reversal pattern. And look at that. Even on the 1 hour, you have the 200 SMA. Your first little target for the harmonics. I love when this stuff lines up. 44.75.50, right at the peak of this prior now it's resistance area. And then the next one, we have a significant level, 45.09. We have 45.04.75, and we have the declining 200 right there. The first target also is the 50 EMA on the 4 hour, so keep an eye on that. And then what I'm be watching for on a bigger closing basis is if we do rally, I want to see if it closes in the rotation zone. Rotation zone is coming in essentially at today's high. If we close in the rotation zone, then I'm watching for the continued rally up first to that 45.09, and then if we don't hit it intraday tomorrow, and then upwards toward around 45.50. By the way, we are still long the S&P. Raised stops aggressively today, but still long the S&P. NASDAQ, I already went through that. Again, I need to see it. NASDAQ bullish line in the sand is going to be up here more, though. Right around this, I'm going to actually bump it up to right around 14,537 is where I'm watching for tomorrow. NASDAQ has to prove itself more so than the S&P and Dow. And we are at the Dow area again for tomorrow. Let me just see here. I'm actually going to come up right around here, today's highs, around 34,680. So those are the key levels. And when I say bullish mode, that's getting into even more bullish mode. Again, the Dow, if it gets up to this bullish mode, watch where it closes. If we close in the rotation zone, I'm watching it definitely in the Dow to hit. It would be into a close up here, would be into a clear path move. Before I target even this higher areas on the clear path move, though, I'd be watching the other side of the daily rotation zone coming in line with the harmonic at 35,116. Let's peek at Intel real quick again. Intel post is pretty flat then. They did beat with earnings. They beat pretty well. And I think they gave decent forward guidance, but not a lot of strong reaction. So again, this should tell you something. We had that great beat by Texas Instruments yesterday, but then just sold off all day today. Okay, Microsoft. Again, Microsoft, we had the down after hours. Remember that? during the live stream. Then they gave forward guidance. I said, watch the call, because during the call they gave strong forward guidance, popping up today because it went up pre-market and post after that call, and then just getting dumped on all day. So it's still, even with companies giving good forward guidance, beating earnings, it's still getting sold. So that should tell you something, okay? And until that starts shifting, it's why I'm going to keep an eye even on some of the earnings for Dow stocks that I may not overall be interested in. I want to see if they get sold even when they beat, and some of the bigger S&P stocks. Because if we keep seeing this, companies beat, keep getting sold, it tells you something about the market and the overall viewpoint that, hey, if something beats, it can run up, but let's just sell into that. We're still not bullish on it longer term. We're looking to get something off the table, especially on these pops. So keep that in mind with these companies that do beat, because you can't just count on, hey, it's beating and it's going to rip. It's now beating. If you get the pop, it's getting sold. So plan that at least for the time being. And if that starts shifting during earnings seasons, we'll take note of it on the market overview. But at this point, I'm not seeing it. At this point, I'm just not seeing it. I mean, Tesla, I know beat. They were lower. Now there's 942, which is nothing for Tesla. That's still within this bar range. Okay? I mean, that's just nothing. So you don't even have a rip your face off move in Tesla with their beat. And there were constant pumps out today for Tesla. The standard Tesla pumpers were out hard today with the, pumping earnings. And I even saw, we're going to be over 1,100. We're going to be over 1,200. Well, they reported, we'll just look at it here for anybody not interested in joining the Tesla live stream. They, again, reported upside surprise of 18 cents, and they beat on revenue. They were roughly in line with some of the other things. But, again, this is noise, 942. We'll see how it opens up tomorrow on the open. But, again, you're not having these massive, massive run-ups that you can just count on, okay, it's a beat. I can take something to the bank tomorrow. All right, everyone, do hit the like button. Again, if you missed any part of the part with Bob, once I start the stream, it'll be rendering, and then it'll be up for watching shortly after that. So please go through it, and if you happen to watch it, leave some comments and like it so we get some more viewership. And we'll see what, as Wavy said, guidance will be critical for Tesla, the company, not to be named. But I still think it's even going to get discounted. And now that's out of the way, if they're selling in the NASDAQ, I think Tesla will start getting beat up more and more. Not to make this into a Tesla live stream, but if anybody's interested. All right, going to start the other one in just a couple minutes, so I'll wrap this one up. Thank you, everyone, for joining. Again, we'll have Bob on again next week. Bye for now.